Everybody, welcome to ThinkScript class. My name is Mike Fairborn. Good to be with you, folks. Hey, today I wanted to take a look at narrowing down a little bit more of what we talked about previously with the exponential moving average. We had looked at previously a zero lag EMA, picking up the speed of that moving average. And now what we're going to be doing is looking specifically at price action. There is an indicator that looks at price action. Are we making a high on a day or the close? We take that higher close, we subtract it from the EMA. Folks, that's completely different. Now we're tying in price action to an exponential moving average to try to capture that same shorter term time frame. It does provide an interesting kind of a scenario. It's referred to as the Ray indicator, one that I'd been just familiar with as of fairly recently. And so looking to incorporate it, we've got some code on that, both for the chart as well as to scan for potential early entries and early exits as well, looking at the bull side. So on that, look forward to diving into that with you all. Hello to each of you. We've got Ray on board with us. We've got life in the fast lane, always. There we go. We got Silas. Hello to you, Silas. Ray, Kevin, Robert Boucher. We've got David, Scott, and Eric. Welcome to all of you. I'm joined in the chat by a good friend and colleague of mine. No stranger to trading at all, as you all know. James Boyd, you'll see him in the chat as JB, does a great job in his classes as well. Interesting comment in there by Silas, looking at Java, Sierra, or Python. Okay, a little bit of coding there, coding languages and etc. Hey, looking forward to diving into discussion. Hope you guys will find this of interest. But yeah, a lot of times traders are a little bit late on those entries. And this is a way to look at entries in terms of the EMA as it relates specifically to what prices are happening as of like today. So some cool stuff. But before we get into that, let's hit some disclosures to get going here. Information here is for general information purposes only. And obviously, Schwab does not recommend the use of technical analysis as a sole means of investment research. There are other approaches, certainly, that can be combined with technicals that we discuss at length in this class. Now, the Paper Money software application is provided for education purposes only. Backtesting results are hypothetical. There's no guarantee that the same strategy implemented today would produce similar results. Investing involves risk, including for some products more than your initial investment. Past performance of any security strategy does not guarantee future results. A quick look at some of the futures listed there. You can see that we've got on our screen. Just a couple of different comments noted too. That futures and futures options trading can involve substantial risk. It's not suitable for all investors. In this class, we do reference those pretty frequently, but not all the time. I mean, we're just from time to time. So it's nothing too significant, but wanted to throw those out there just because we might reference those. In fact, yeah, we'll go ahead and oftentimes do that. So here we go. Let's take a look next. Just a quick overview really of what we discuss within this class in terms of it as it relates to the steps to think scripting, specifically scripting, identifying the goal. Is the goal going to work? Can think scripting meet that goal? A lot of times we are using indicators. We are doing that today. I'm going to show you how we can actually alter the code, the original code, to maybe provide even further insight, maybe tying it into more of what maybe the RSI looks at, closing prices. Specifically today, we're going to be looking at the high for a bullish signal. It's called, I'll get into the details of it in just a second, but you take the high of the day, you subtract the EMA. This is really interesting because it pulls up the sensitivity metric between what's happening in terms of the prices, what the prices are doing. Where's the EMA at? It's a way to really capture that gap in between an EMA movement and price action. And you're only going to get a signal when those prices are diverging above the exponential moving average, and you find out very, very quickly if that's the case. So it's totally unique. It's a different way to examine it. But folks, that's just an example of today's discussion. We do apply those ThinkScript tools, custom scripts. There are a couple of different lines. I really tried to clean this code, so it's not so extensive like last week's. It was quite long in terms of the turtle trading. But we are going to share that ThinkScript link as well when we get through it. But again, we have one for the charts. I want to show you the chart so you can visually see it a little bit easier than what the original code represents. And then also a scan, of course, bull and bear scan. Okay, so let's go ahead and just dive on into it here. Let me just share my screen and we'll get rolling. Okay, so we'll pull this guy up here. Up. There we go. Okay, let's go into just a quick note on the markets very, very briefly here. What we're seeing on the markets today. One thing that I'll always do, folks, anytime you pull up the markets, because you want to get a sense of, hey, what kind of code. We created a lot of code in this class over the past year and a half, basically. And there are different codes that meet different conditions in the market. It's always interesting just to get a general sense of where we're at in the market, how we are setting up. And this is, a lot of times when you get a big move on the market, you can put in something like a simple moving average. I know JB uses some that are a lot, shorter term for stronger type moves once you got that in line. But let me show you this right here. So very, very common to do, and just a great way to kind of get a sense of where are we at in the market, what kind of code may we be using. Here's just an example of the 50-period moving average that this particular trend in the S&P 500 has had a pretty interesting relationship with the 50, and that's not unusual for these extended intermediate to long-term moves in a market indice. The 500 here we're talking about. You can see that much of it is very much in line. If I just put kind of a parallel line in here with, the markets over here, it's very much representative of that line. And sometimes it's interesting because markets will move at different paces, and you can plot on here different moving averages to help us out with that. That 50 is held up pretty well, but you'll notice what we do have to have in order to stay above the 50. We've got to have a continuation of the upward trend. Now, November tends to be strong, so I did want to kind of highlight, although I did create a bull and a bear scan to highlight our discussion today, I want to focus in on the bull side of it to kind of hit us, to kind of just get us lined up. And by the way, just real quick, I'm just curious myself, because I've been doing coding here for the last few hours, but in Market Watch, this is a great place to go. What the heck's moving? I've got the 5-day averages here, but I'm just curious myself as to what we've got moving the markets lower. There you go. That's kind of the top of the list. Hood, Corning, Disney on down the line here, STX, and you keep on going. So, there's a lot of, obviously, I'm saying some tech in there, clearly. Tech's been the winner as of late. Maybe some other financial companies, too, to look at. By the way, too, I don't know if you guys remember, but just as a heads up, I'd like to put this on during earnings season, okay? I find this to be helpful. This is a code that we built, an earnings beat. Did they beat over the last week? You can set this up however you want. This is just kind of a segue. We really, just a kind of a break this down a little bit, but we created this quite a while ago. And yeah, we're just looking at a 5-period. And by the way, Robert did help quite a bit with one of the codes in here. So I appreciate him doing that early on, help me out. Getting an understanding of some of the earnings aspects, but that just gives you can change that from today or the last 5 days. We are in, midst of earnings season. So there you go. A cool way to do this too. Watch this. Go to the net change over the 5-day, which is a built-in indicator, right? Go now to your earnings beat if you really want to isolate it down. In other words, what are your earnings gap and goes? What have maybe had some strength and continue to run? Here's your 5-day. I want to see where the strength is and where were the beats in here. There was a beat, so you might have earnings behind you on that, but it's up 5% over the last 5 days, 1 to 5 days. And the no beats doesn't necessarily, you know what, I could update this code, say that, there weren't earnings at all, because not all these companies had earnings. So we're just looking at the beats in here. I shouldn't actually say no beat, but they didn't beat earnings because maybe they didn't have earnings in the last 5 days. Does that make sense? But now you can kind of just scan through here quickly and find out, hey, what companies are up and which ones are beating earnings. Occidental, for example, some of the oil or energy companies. We didn't have a ton over the last 5 days, but there you go. So just some codes that we've used that can be helpful at different times within the market. But let's kind of shift away from that completely and go right into the discussion of our indicator today, because it is front and center. And it is, if you've seen it before, I'm going to pull up the original here first. It's called the Ray, and they refer to it, I've created the Elder Ray. It was built by Alexander Elder. But on our discussion on the zero lag EMA, it led me into this area, and it is quite fascinating. There's the bull and there's the bear. I'm going to show you and compare side by side, and I'm going to add all three. Well, let's just add these first two. Not the bear. The bear is one, you can just imagine it's just the downside. It's just showing weakness, which is kind of helpful too, clearly. But let's talk about it first before we dive into it. There is a default here of a 13 is what he chose to use. I'm just using his default. So that is the 13 period EMA, and that is going to be one of the key drivers that we have right now as we look into it. I'm just going to quickly click over here so we can break it down, and then we'll understand it, and then we'll kind of dissect some of the code in here too. But with the Ray itself, if we look at it, it's going to give us a little explanation. Failed. Okay. It always fails when I'm on the presentation. I don't know why, but here it is, basically. And it's very, very straightforward. You are using highs, you are using lows. What is the average? The average length is 13. So ultimately what we're doing here, the whole idea is basically for what they refer to as bull power. And how Alexander Elder describes this as is he says, when the bulls take over, okay, that's the bullish scenario. So the bullish scenario is simply this. That equals the high, as I instructed, kind of showed earlier. Let me kind of straighten this out so I can draw a little easier. There we go. The high EMA, excuse me, the high, just kill that one right there. The high minus the EMA. Okay, so you can imagine what's happening on the chart there. When we've got the high minus the exponential moving average, now the high of the bar, that trends to track price trends. So in other words, you can imagine prices coming down over here, right? But are they, where are we at in relationship to an EMA? Okay, when the price begins to go up above, and as soon as we get the high minus the EMA, and that's a positive, we move above a zero line. We move above the zero line. So we're going to be able to see this in a line format, but I've also got here for us a histogram format that shows, some of the signals that I think could be helpful. Let's go ahead and just add it in right now so we can see it. So it's funny, it puts them both at the same color. That's right. Let's go ahead and just change this. It's a lot easier to see it when, you've got a couple of different colors in there. So here's the bearish line, the bear power. Here's the bull power right here. Let's take a look at it right now. And you've got a zero line over here. Now, when you begin, when the high minus the EMA is a positive number, right? When that starts to exceed that EMA, what you'll get is what? They both went that color. Hang on. Did I do that on accident? I might have, yeah. So yeah, I did. Duh. Okay, so here we go. Turn this back to blue. So there you go. So you got the bullish line up on top, the bearish down below, and you can see us breaking above that zero line right there. Now, histogram form really helps out in this, and that's where I pieced together an indicator on this, but you can see us cross right above that level right there. Now, that's when that high is exceeding that EMA, and that's the very, very initial start of the trend, as you can see. In fact, you've got one like right there that occurs. You've got another one right over here. This is just on the ES. We'll throw out other ones here too, but it does a pretty interesting job of saying not just a hold or a cross above an EMA, but what is price action doing relative to that EMA? There's another one right there. There hasn't been too many times, but they were interesting entries, and I didn't even look at the SPX before we went through this. Okay, Let's go ahead and I'll show you the indicator that I put down here that will show us bull and bear indications. You'll just see, and I've just called it Elder because it was after Alexander Elder that pieced this together. But yeah, the line, zero line's grayed out, and we've got that plotted dynamically. I'll show you how that's done here in a second. But you can see over here, these are the scenarios and how it sets up here. But what you're seeing in here is both the combination of the bull and the bear histogram. You've got indications of where the bull was at, just like you can see right here. So you're still getting it. But then you get the bear as well. So it just highlights bull and bear. It's not really saying, you know, buy or sell as an example of how this indicator works, but bullish or bearish. Let's go ahead and let's zoom into a stock here, any old stock. This is one we did in our swing trade class this week. The sounds I've got are, I've got to correct that on here. I was going to try to do a little different where it made a sound when it went off on the day. So I've got to maybe make an adjustment to the code in here. But I don't know if that sound's coming through, but it keeps making a sound every time I load it up because it is showing a bull signal. But over here on Apple, for example, it's not the same as the SPX. You're going to see an extension over here, and then your bull is right there. So I'll pull it up and I'll just highlight where that comes in at. We can look at any company here. It's fascinating because it's not looking at anything else aside from a 13 EMA and a breakout. But this is one I want you guys to kind of, you know, if you're interested in these kind of earlier type signals, to keep an eye on it and see what you've got. Here's another one on right there where you're getting a bull. Notice it's not the bottom, but it's really calculating that high. And if you look closely, that's exactly when we're crossing over the zero line here. Here is the original one we've got up top. This is also an original, but this has the combinations of bulls and bears with the signal. And like I said, you guys, as we've talked about this before, always try to keep in mind that, you know, you want to look at this not just as a signal by itself. Sure, it's doing some things behind the scenes for sure, but look at it in the context of this. Where are we at on the chart you're looking at? The scan I have put in place also looks for the trend to be up, okay? But with the trend up, we've looked at a number of different sort of price scenarios here. We've talked, hey, you know, like on a bull flag specifically, what might be an interesting area where the flags could start to unfold? This area right here. Sure, but what's happening ahead of all that? You're looking at it right there. It is the pattern. What's the pattern? Or what is another moving average doing? Or what's an indicator doing? In this case, it's simply just a price pattern. We're looking at what's the pattern showing? Is it, you know, one of these? We've seen the, you guys are very astute at finding these. Believe me, you've pointed out several of them to me in the past that have started to break out, but an inverted head and shoulders pattern. It's kind of like what's going on right here, where we could start to move up. It might be like that early signal because, you know, sometimes you might be getting these too late, and that's where this can help us out at. Now, as I go into that, I did want to state this too, that I'm going to knock these guys out. We're just going to use that main one that I've got down here. And I'm actually going to say, yeah, we can just look at that in volume. That's fine for now. Okay. We'll scan. We'll see a number of these different setups coming up. It does have to be a bar, though, that exceeds the 13-period moving average. Now, you'll notice over here, and I chose this specifically because the indicator doesn't have this built in. It's just showing us the signals. I guess I could have built it in. I built it into the scan. But one of the things that Alexander Elder mentioned is make sure as you do this, one thing you can do, he says, you know, a key consideration, just like we get a lot with a lot of our signals, even price patterns, we saw over here with the flag pattern, what's going on there? The trend is up. So don't even start to give us that bull power signal until prices are above, prices are greater than a moving average, at least something, anything to help us try to define the direction of the trend. That's what we're after. So that's what I've got here for us on the scan itself. Okay, but let me just see what we've got. Yeah. Oh, let's see. John says triple screen method. Interesting. Oh, okay. He likes JB's method more. There we go. How do I get the Elder Ray and GB histogram on my chart? Okay, so what I'm going to do is I'm going to let me correct just a couple of things on it. I'm going to post it though. Do you guys know where I post those? I'm going to make sure everybody does. Here is a look at our channel. I'm going to share the scan with you right now, but I've got a couple bugs in there before I send it out to everybody. Like I've got a sound device that goes off. It goes off at different times when there's a bull. Every time you pull it up, the sound's gonna. I'll be cleaning some of that up. But if you go to Trader Talks and you click on any old, well, anything we've got on here, any webcast that is, like what do we have on here? This is a swing trade where we did pivot point bounces. I'm just going to highlight this for you guys real quick. Do this. Let me clear that off. This is just one I did earlier in the week. Scroll down below under the section that says more right there. Click on more. And what you're going to want to do is go down here and just scroll down at the bottom, and I'm going to have it listed just like I have this sector rotation grid link. That's not a ThinkScript, by the way. That's just simply a chart. But I will have all of the codes listed down here. I'm going to share the scan with you, but I have a bearish scan I'll have down here too. I'll also have that price data. I just want to let you guys know where you can find that at too. Okay, this is one we did using pivot points. Just as a side note, yeah, if you want to check out this one. This does tie in, this is another way to get some of those entries as well. But if it is of interest to you, this is for the swing trading right there. Since I had it at my fingertips, you might find it informative because it is quite similar to what we're doing now. Folks, if you like this kind of content, by the way, smash that like button. Be sure to subscribe to our channel. Just lets me know that you guys are finding this information helpful and informative. That's it. Okay. Now let's get into the scan a little bit more as we go through this. Absolutely, Si. Yeah, thanks for bringing that up. And I wanted to highlight it too. And I'll show you guys, how to get into some other details with the scan. Before I get there, though, you know what else we see? We got another indicator out there that is really quite interesting too. I use the RSI quite a bit. RSI does look at closing prices. I found this interesting because it looks at highs. Highs are interesting, but also with highs, you might just get a sharp spike. And if you're comparing the moving an EMA to a sharp spike, I think we could maybe enhance it, or just change it. I think it's sort of an enhancement. In my mind, it's an enhancement. But it's something like an RSI too. And let me show you how we would do that as well. So over here is our RSI. You can barely see it. The line's so thin. But notice if I go into the RSI, RSI is using closing prices. And it stands to reason if the price of a stock is going to go higher over a period of time, it's got higher closing prices getting you there for sure. Now, it could have some higher highs, but I've seen stocks literally shoot up a number of highs and not do too much in terms of the trend going higher. It's got to close. I don't know about you guys, I tend to put a lot more weight on the closing price. By the way, the closing price is the final print of the day. When people check their quotes at the end of the day, across all kinds of different timeframes, you see it on a scroller, let's say on the Schwab network or whatever the case might be. When they're talking about it, the closing price carries a lot of weight. It used to be the close, the price that you'd see in the newspapers. That tells you how long I've been doing this. Mid to late 90s, that was a newspaper every day. I think some still have that, but it's not as common, but it was the final number on the day. Closing prices. Let's look at the Elder again. The Ray here. Here we go. Pull it up, just the standard Ray. I want to pull this up and just show you guys. Look right there. You know what we'd have to do if we wanted to alter something like this? This is simple as can be. If I just want, okay, let's do this. Actually, if you just want to do this real simple, let's go ahead and just copy this. We'll pop back here. We'll create an indicator. I'm not going to have, let's just do the, you could have both, but let's just say we have one line only. Okay. And we're going to take out the bear power altogether. Okay. So we're just looking at the bull, just that one line. Where is it, where is it in reference to our exponential moving average, which we have listed up top, okay? But what if I just said over here, I'm going to use close instead of high? We can adjust this. We can say maybe that's a little bit more valid signal, perhaps. It would also kind of incorporate some of those components that you might have in there of the, like a Cahold. It close above the high, the low day. Folks, it is different. It's going to change it. In my mind, I think it could go a little bit further to saying, was the market strong enough to just close at this level as opposed to the high? Generally, in my mind, the high might be a level that the market just rejects outright. It says, well, we reject this level. It's the high. Where does it finally close at? It's one way to do it, but I have just adjusted this based on the close, much like an RSI might do, or others. Okay, I think that's one reason as I think about it, what makes the RSI so useful. But that is something you can do. And notice I just created this right now. So that is just a second code itself. I'll get you guys this one. I'm going to clean it up quite a bit, but that will be located down there, probably, hopefully within like 30 minutes of our the close of this session. If we can get it gone, through the process of it for approval and things like that. So just a quick note. So wanted to throw that out there for you. It will change how that looks. Now, I'm going to actually change that too. We're going to do two different scans. We're going to do the scan on the high. We're going to do the scan on the close. Here is our scan right here. I've got it set up. I'm just for the heck of it, I wanted to pull it across the Dow that had been moving as of late. Let's go ahead into the Dow, and I'll show you this. You guys are going to love how I cleaned this one up too. I actually had it as a little bit longer, but it's so much easier. I think this is just going to be easier for us to understand these indicators going forward. We actually have, there's a small basket of them. There's 5 right now in this group. Okay, here it is. So this is Microsoft. There's CRM and others. Let's clean this up a little bit too. We'll just keep our original on. And here, okay. First one was CRM. Wait, CRM. Hang on. CRM, Salesforce. Hang on, let me take a look at this. It didn't look great as I pull it up. This is the actual script itself. Hold up, let's get into it because that didn't look. Oh, where are you? There you go. Oh, it's right there. Okay. So this is the script itself. I put in a period of time in here as well. Look how straightforward it can be. It's based on the high, and it's an exponential moving average, and I've got a couple of different things going on behind the scenes in here. I'm saying, yeah, I've got our exponential moving average, right? We've got an exponential moving average in there. EMA, there's our length, there's our input length, but we've got the bull, there's our high minus our EMA, and we've got a bull cross in there too. Okay, so what I'm looking at, we've got the scan in there too, but I'm saying that the bull is greater than 0 over the past day. Okay, now what we can do is we can combine in here also an exponential moving average, like prices are also greater than a particular moving average to get the trend in. I don't think I was working with the trend. I don't think I put that in. Like I've got it over here on, let me show you like right now. If I go in and type in the exponential moving average, remember prices, we were looking for the prices to be above an exponential moving average, like a 13. Click OK and OK again. Okay, so it did it within the last day. I'm looking for the day of, and I wanted to still be holding above that level. You can see that technically the high was above there, and that's why it triggered. And that's not a good trade, though. That's not a good like scenario setup. CRM, I'd say, is very interesting from a long term. One of the companies, I'd actually looked at because it's holding at a long-term support level, but on a short-term basis, kind of running into a couple of different potential resistance points. So let's see, we can go back into this. Yeah, oh, keeps putting my line right over there. Okay. We're looking for the bull cross and the scan to occur. I'm looking at it over a, it's good. So Microsoft actually, I guess, is crossing today, like on a today basis. And notice the high is above, just slightly above the 13. Although, you know what's funny? This is the difference. Do you see the high? The high went above our level here, not the close, folks, not the close, right there. We just got above. So it's showing some early indications, but it's right there. And this is exactly, I think, it could be a weakness in the indicator that we can correct. We can go into the code and flip it into a close because ultimately, like I said, you can get these high kind of fake outs. Ultimately, this could be like an area where there's market rejection. A lot of highs are referred to as a market rejection level, up or down, right on the downside too. That's why we're getting the signal in here. So notice over here on the close, if I run it across a much bigger basket, so just working through maybe some of the reasons why we would do this with the close as opposed to the high. I don't know if the high makes it as useful. You're just going to get a lot of potential fake outs in here. Case in point, like let's just choose one of these bigger basket. Dow. Here we go. Here's Dow right here, and there is your signal right there too. So we got it pulled up. The point came up right there on Dow. Notice you're getting the close above there. Maybe a little bit more relevant. Now look at Dow. Okay. So you've got a couple of different things. You've got prices. It is a higher low. It's over a period of time. All else equal, this is kind of a fascinating entry. I should say signal in terms of where we're at. Okay. Is it above that line? Yes. Could we change what moving average we want? Absolutely. We don't have to use the 13. The system is built with 13 right now. You could have a longer term moving average. What if you said, hey, I want the stock to be above the 13 and the 200? Well, let's say the 200-day moving average or the 50, kind of like the market is. That would get us off some of these lows. Now, we can still get it, just like we saw on Apple. Prices signals when the trend is up. But this is like the bare minimum. But take a look at this. Just, I mean, is looking at it, that did hit a high above this range, and we've been kind of bottoming out. If we get a higher low here, it could be giving us an early signal for the possibility of a trend. We don't know. But that's what this is kind of designed to sort of help us with. You guys see it? There's your bull entry. And the bear's down here as well. It's in a sideways channel. This is where I think, let's just change it and see what we get in terms of closes. Let's make that adjustment right now. We're going to get a lot less because it's going to have to close in that area. In fact, I can look at a close over the last couple of bars, which is what we're doing here. So the bull cross or the bull cross within the last 2 days is what we're really looking at here. But I'm just going to change this. Just kind of like the exponential moving average has a high, so instead of price, we're saying close. Now, it could still count for today's price if we're closing above that level, just like we were on Dow, but it would cancel out something like a CRM. So this is an adjustment to that code in a lot of ways, and there you go. So over the, you know what, let's just don't, I think we got a lot more in there. I just want to look at today only. Let's get back here to it. We'll get less if we just look at today. I'll just say 0. It's fine. Just make a quick adjustment here. Okay, so 24. Let's see, so what do we got? So Dow is showing up, just like we thought it would. And here are some of those other stocks that are also, pointing up. So what do we have? AWK is one. I haven't, Waterworks. Some of the utilities have been okay. There you go. Is it just above the 13? Yes, there's your signal right there. So the scan is working in line with the indicator. Is it above a longer term moving average? No, it's not. And that's something we can adjust. Close will give you the current price. It does. Chris, yes, that's exactly my point. So it gives us the price as of right now. But in case this were to drop below the close, it wouldn't signal it like CRM. Okay? So you're getting kind of that, sort of that Cahold sort of thing. It's not built on the Cahold. It's built on something totally different, but at least you're getting that in there. Let's look at some of these others too that we can just look at. Like, yeah, we saw Dow. Dow's interesting. I haven't looked at this one in a long time. LYB and Brown. Let's see, LYB. There you go. So maybe some extra strength to get above right there. It's a big bar. It's a bigger bar. It's probably the biggest bar, the biggest green bar here. Notice this, that I've seen since this point here, going back 2-3 months. Will it change? The trend is sure down, but it's designed for short term. Yeah. We definitely, I mean, we've got to have a longer term moving average in play here. Here's another one. So you've got your range right there. A lot of sideways, a lot of bottoms, no doubt about it. So short term there. Ball is there. And what else do we have today? Yeah, HRL. Okay. You guys are saying it? Wow. So many are low though, but that's what we're picking up on the 13 period. These companies are really moving off. And so what you have to say today, if you look at the markets, why are we getting so many that are down? My explanation for that, folks, would be simply we're down on the day and tech is down. So what we're seeing is a lot of companies right now that have been doing this over as the markets have been up. So a lot of these are consumer staples. And so what have consumer staples been doing over a period of time? They've been down. So what we're seeing today is tech stocks leading the way down, and that's why the market's down, and kind of a rotation potential over here, at least as far as today is concerned, in some of the more traditional names, consumer non-cyclicals, companies like that. Okay, so keep that in mind. That's what we're getting at. Let me see. What I would like to do too is I would like to get a longer term moving average in there would work. Let's see. CMCSA was in there. Okay. Let's see. Okay. Potential island reversal, gap reversal setting up. Yeah, it could be, but you're right. It's right here at that point. Notice I'm not getting a bull on each one of these right now. So I've got to correct this indicator a little bit. It's getting, I'd say, most of them, but as soon as this is coming up, it should signal bull. I have no idea why it's not doing it every time, but I'll work on it and I'll have that posted for you guys right when we're done here. But that's going to be a scenario. We're getting a lot of rotation stocks today off the bottom, like chemical companies. Dow was a big one, obviously. What are we getting in the NASDAQ? I want to look at the NASDAQ too, but there you go with Dow Chemical. Let's scan over here real quick and pull it up. There we go. Oh, I don't need it there. What am I doing? Okay, so let's go over here. We'll just scan through here. NASDAQ 100. This will be interesting because a lot of the tech, although NASDAQ has been strong, it's been the tech that's been holding it up. And here we go. So VRSK. Oh. Okay, still the same thing. A lot of potential bottom kind of movers right now, but this is where it's at today in terms of strength. Regular stocks are really getting hit pretty good. Costco, CTAS. We'll hit a couple more. CTAS. Okay. Signal's working above the 13. And there we go. And the last one was Costco. Yeah, Costco, which has been down too. Again, a lot of the low beta stocks are starting to move. So you could look at it as a rotation. It's showing us obviously signs of where possible rotation could be. Maybe a group of companies to keep an eye on if these are strong enough. If the markets break that 50, coming down that 50 period moving average, these companies could be of interest to keep an eye on. So there you go. Some of those scans could be of use. All right. So it says, is there any way to speed up Thinkorswim's charting speed? I've noticed that a lot of time the price moves are faster than the software is able. Oh, really? Okay. A quick note on that, Silas. Try this for me. I want to, because that is an issue that I might actually have an answer to right now. Check over here. I'll show you the sign in prompt, and I'll show you what they'd mentioned for each of us to do, at least from the tech group specifically. I'm just pulling up the prompt right here. I'll highlight this because it is something that obviously you want to get in place. But click down here in the bottom left-hand corner of the login prompt right here. And then just make sure that your memory usage, you can bump this up to, you can't see it on my bottom of my screen. Actually, mine should be at about, I think 6144 is the number they had mentioned, but you can put this in. I'm actually at the lowest, 32 by 6144. But anyways, you could put the memory usage, bump that memory up, and that should be able to clear that up for you, because the platform should be able to accept as quick as they're trading. Actually, as long as your connection speed is high enough. But yeah, so check that out. You clear the cache and restart as well. There's that option too. They put that right in there for you. But that should be able to help it. So the platform should not have that problem as long as there's enough memory, and clearing the cache and restarting could certainly help. So I hope that helps there, Silas. All right, everybody. Well, today we talked about the elder, bull, and bear. We've got a couple of different indications, and I think it's fascinating. But on this scan, I'll go ahead and let me just share the scan right now too. But let me go ahead and make I'm gonna go ahead and update it too for you guys, and I can do it right when we're done. I'll just start punching it in. But I will take the code and I will. And this is funny how it keeps putting it right there. Let me just share it. Okay. What I'll do is I will adjust that moving average. I'll put a box open here for us. I'll open up a box within the code itself so that we can change that moving average length in terms of the trend. So I'll have a specific trend and a moving average length. I'll get that right when we're done here. And that's the one I'll say, but I'm going to go ahead and just share this one for now, just so you guys have it. And again, remember that the ThinkScript, the scans themselves and those tools are not guaranteed for timeliness or accuracy, but as long as the platform has is good data flowing into it, they should work mathematically. But I just want to throw that out. But there is the code. Once you have that code too, come up to the top under the setup, you can go open shared items and just plug it in right there. But again, I showed you guys where to take a look at that. But that's how you do it. Hit preview, name it, import it, and you'll find it in your scan section, everybody. Okay, well, I'm going to get working on that. I'm going to clean up that code, but that will be right beneath the video under the more section of the description at the bottom. So good to have you all on board today. Thanks for those of you joining us just a little bit late. But on that note, folks, yeah, be sure to like today's presentation if you found it helpful, informative. Thank you, JB, for your help as always, folks. Have a terrific day. Look forward to future discussions. Take care all.